Goods and services get more expensive. Even if inflation comes in at a lower number, those higher prices are still higher prices. They're not going to go down. So fighting inflation simply means stopping it from moving unrealistically higher. And the truth of the matter is, that means the dollar buys less. And that's been a trend that's been going on ever since the final nail in the coffin, which was Nixon taking us off the gold standard, of course. Even before that, we saw some damage, but once the dollar was fully fiat and not related to any hard asset, gold has had the same buying power as it always has,
Right.
and the dollar has been shrinking and shrinking year by year, year over year, decade over decade. And that's why I love gold and silver.
GaryWagner, the editor of thegoldforecast.com, aptly highlights the inherent strength of gold and silver as assets that maintain their purchasing power over time. Despite the inevitable fluctuations in the prices of these metals, they have historically proven their resilience, preserving their intrinsic value even during periods of economic turbulence or market instability. While the prices of gold and silver may see short-term fluctuations, they have consistently held their ground against the continuous erosion of fiat currencies' purchasing power. This enduring value makes precious metals a favored refuge for investors during times of uncertainty, as they provide the stability that fiat currencies lack. Contrary to fiat currencies, which are susceptible to devaluation through measures like excessive monetary printing, the intrinsic value of gold and silver offers a robust defense against inflation. This is further highlighted by the significant loss of purchasing power the US dollar has experienced since 1971, contrasting with the consistent stability of gold. The recent acceleration in US prices in January, particularly in the costs of services like housing and finance, has reignited conversations about the prospect of a mid-year interest rate cut by the Federal Reserve. However, the relatively modest annual increase in inflation suggests that the economy is not currently in a position of severe price pressures. GaryWagner's observation about higher prices, contributing to the decline in the dollar's purchasing power over time, resonates with the broader narrative of the decline since the Nixon administration abandoned the gold standard in 1971. This ongoing trend underscores the intrinsic value and resilience of gold and silver as assets that stand the test of time. Join us as we explore the insights shared by GaryWagner. Stay updated by subscribing to our channel and activating notifications. Thank you.
There's lots of reasons that inflationary pressures are going up. But I think we touched a little upon this last time, is that as goods and services get more expensive, even if inflation comes in at a lower number, those higher prices are still higher prices. They're not going to go down.
Right.
So fighting inflation simply means stopping it from moving unrealistically higher. And the truth of the matter is, that means the dollar buys less.
Mm-hmm.
And that's been a trend that's been going on ever since the final nail in the coffin, which was Nixon taking us off the gold standard, of course. Even before that, we saw some damage. But once the dollar was fully fiat and not related to any hard asset, gold has had the same buying power as it always has.
Right.
And the dollar has been shrinking and shrinking year by year, year over year, decade over decade. And if you think about it, I know I don't even want to name my age, but I'm not a young spring chicken. I'm really an old rooster. And I remember the Good Humor truck going by and taking my dollar and being able to stock up. And the least expensive was the nickel not lollipops, but frozen ice. When you think about, and that's not that long ago,
Yeah.
when you think about how much less the dollar buys now, that's directly due to A, the fact that we're off the gold standard, and B, what they call it inflation. I call it watering down the dollar more than anything else, because there's lots of reasons, supply chain, bottlenecks, this and that. But the truth of the matter is, every time it costs us more, what we are really saying is the dollar buys us less.
Exactly.
And that's why I love gold and silver, because both to some degree, silver and gold have different correlations, but to some degree, have the same buying power they had 50 years ago, even 100 years ago. And that trend is still intact. So for your subscribers, the followers of Wall Street Silver, who are commonly called silver stackers, they have the ability with that physical silver to
Right.
purchase the same with the same buying power, let's say, of when they bought that silver a year or 2 or 3 years ago. Even though silver hasn't gone up that much, it hasn't kept up with gold. But what it has eloquently done is allowed them to have an asset that would allow them to buy goods and services at pretty much the same price as 5 or 10 years ago. And
Right.
tell me what other liquid asset out there can make that claim. I have to tell you that I've thought that that was something that couldn't be sustained forever. Powell has come out and said that our national debt is unsustainable. Yellen's come out and said the same thing.
Right.
It's a worrisome thing. I think it should have imploded years ago. And
Yeah.
I do not understand why they're able to kick the can down the road and the can continues to move and it doesn't just implode. How long can it take? I have no idea, because I'm extremely surprised they've been able to do it this long.
Yeah.
When you look at Keynesian economics, it's rarely new. It's really a scientific experiment, because if you look back before even 100 years ago, when all countries were on a modified gold standard, a treasury was able to spend what was in the treasury. We've talked about this before.
Yeah.
When the treasury ran dry and the king wanted a new summer home, they raided and pillaged and raped the next town over.
Yeah.
That's how they got the treasury back up.
In discussing the decoupling of gold and silver, GaryWagner underscores the evolving dynamics between these precious metals, which have historically moved in tandem as safe haven assets. He notes a shift in recent years, with silver's correlation with industrial equities becoming more pronounced. This shift could partly explain the growing divergence in gold and silver prices. Silver has a more balanced demand profile than gold, primarily benefiting from its status as a store of value and a safe haven asset. Approximately 56% of silver demand stems from industrial applications, while the remaining 44% is driven by investment and other avenues. The greater weight of industrial demand in silver's market mix, relative to gold's, contributes to its heightened sensitivity to broader economic and market trends. This complexity in silver's relationship with gold and the broader market is further highlighted by the Silver Institute's projection of record-high global silver demand in 2024, expected to reach 1.2 billion ounces. The executive director of the Silver Institute has expressed optimism about silver's prospects, particularly in terms of demand, indicating a potentially strong year ahead for the metal. GaryWagner's perspective emphasizes the multifaceted nature of silver's dynamics, suggesting that factors beyond simple supply and demand equations are shaping the market. Let's get back to the interview.
There is an obvious decoupling that's occurred quite some time ago between the former tandem relationship of gold and silver, and I think that was because both of them acted as a safe haven asset. Times of turmoil, they both tended to move up. We saw that disconnect come a little while ago. But we also saw silver become very, very sensitive to moves in the industrial equities,
Right.
because it's highly used in that. However, the caveat is the recent declines we've seen are occurring in conjunction with the S&Ps going to all-time record highs, which is kind of a head twister, a quagmire, an undefined answer to why that is. I was doing an interview the other day, and the interviewer said that currently news came out that China has a scarcity of silver. They're raising their prices.
Oh,
I
really?
looked at the chart and it was down hard that day. And I said, well, that might be true, but at least the traders in the States are not supporting that assumption. The institutional and big traders, if they bought that story, if they believed that that would have an impact on overall silver supply demand scenarios, meaning it would dwindle the supply and increase the demand, we would have seen it move higher, which it hasn't. So My conclusion is either it's something put out there so traders can go short, or it's not that much of a big deal in terms of the supply on hand.
Hmm.
So because the professional investors, the hedge funds, are trading with large amounts of capital, meaning they can move markets, and they're betting on what they believe to be the outcome, I can only assume that they're not putting the same kind of emphasis on that story that others might. If we look back in time to the banking crisis, we know what the worst of all possible outcomes could be, which is major bank failures and the government reaching in their pocket and using your money, my money, and our listeners' money to bail them out. And they'll take that money and give fat bonus checks to the executives.
Right.
That's typically what we have seen. I think that overall, the banking system, aside from the investments in commercial real estate, because that has been taking a huge hit in terms of pricing, is fairly sound. I think it's on a case-by-case basis. It's going to be the smaller banks that aren't as well capitalized as the large major institutions that can figure out ways to absorb the hits. They have a lot of techniques to do that.
Right.
And if push comes to shove, they're too big to fail, so to speak. And that has proved to be right in more instances than not. But it is an issue that we need to be concerned with. And there is the potential for that to work its way into the economy and wreak some havoc. Absolutely.
Silver's history of high volatility has often enticed trend followers and speculators when significant market movements occur. However, periods of inactivity have sidelined many market participants. Still, the prospect of a significant price move, either up or down, could lead to an influx of buyers or sellers entering the silver market. One factor that could have a bullish impact on silver is the potential creation of a BRICS currency backed by gold, coupled with ongoing central bank gold purchases. This potential development indicates a decline in the US dollar's value and role as the world's reserve currency. As the dollar weakens in the global financial system, it typically supports higher silver prices. How might the potential emergence of a BRICS currency backed by gold influence future silver market dynamics? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.